right, good morning, everybody. It's March 31st. March 31st. We got a couple things up on the screen right now. So we have NUGT right now that, we had our switch here, and then we had our switch back, which was giving us permission, although this permission is really extended. So we do have permission. So it's pulling back right now. So I'm looking for an opportunity to jump in here so I can have, closer to risk. So right now, let's see here, 54.19 and then 53.77. So 42 cents. So I'm going to go ahead and pull up the trade calculator. So 238 shares is what I should have bought of NUG. So I'm just going to do 240. All right. So right now, if I jump in right now and I take a loss, I'll lose, about half of what I would have lost. So I'm going to go ahead and jump in. All right. So we got in a little bit lower risk, which is nice. We haven't had a loss in NUG in a very long time. So it's very possible that today is the day. But if I keep on waiting for losses to come, then I'll keep on missing out on winners. And, if I have one loss, miss out 3 winners, it doesn't make sense. So I'm in, and then we'll see what happens. And now let's look at APPS over here real quick. So APPS, we had our switch to the long side. We got permission, extended permission, which is higher risk. But we did get permission, and then it got stopped out, which in this case, I would have speed bumped it. So this is the trade that I could be in, and now it's on its retracing this. So I'm going to play this to the short side here in just a second. So I will be playing this off the speed bump because there's no algorithm telling me to play this other than the speed bump. So I have to mark it up as it would be for a speed bump. And if you're not sure what all this stuff is, over at the link below over at the site, you can take my classes. They're all free and learn all about my trading strategies and what I'm doing and all this different stuff. And there's a bunch of stuff there that I'm sure you can apply to your strategy that would also help you out. But yeah, all that's free over there if you're not sure what I'm talking about here. All right, so APPS, we're going to do the same thing. So what was the risk here? It was 80.49 and 79.40. So basically 100 shares roughly. All right, so we're going to go 100 shares and we're going to go short. All right, so now we're short APPS. So this one, that's on there. You can't really see it too much, but we're so close to the high of these candles where this resistance was. So I am going to move my stop just a little bit above. So I will risk a tiny bit more on APPS, and I probably should have got a smaller share size so that my risk would still be appropriate, less than 100 bucks. Because we only want to risk 100 per win or loss. So I probably should have did that, but is what it is now. So 80.75, 80, 80.82 it looks like. So 80.82 is where we'll put the stop. So yeah, we're risking quite a bit more than we should right now on APPS. So if I get some shares into profit, I may we'll see how they get into profit. I may pull some shares off the table so I have the appropriate risk. I could pull them off right now. I just don't. I hate pulling stuff off in the red if it's not, if the market hasn't told me to. Because right now I could be right. So I'm gonna wait. All right, so here we are all marked up. I put the little marks into where my actual entries were in the candle. They're touching the candle. Yellow is my entries. Red is my stops. Green is my targets. And I try to put the yellow on the candle that line drawn from the candle I entered in. So later when I take a picture or a screenshot of my my chart, then I can see exactly what was going on. So go NUG, go. That'd be sweet. And we'll see what happens here with APPS. I may speed bump this. I mean, if it breaks out of this, it might be worth a speed bump. So let's go ahead and up that to 200. And then we're going to go 80.80. All right, so NUGT is about to hit its target. We're pretty much 90% of the way here. So we're going to go ahead and move our stop up to break even and then some based on the algo. It should be right around here. It's not break even on where I got in. It's based on where the algo is. So 54.19. So we want to be just above 54.19. All right, cool. So now we're good to go. Now we'll just wait for that target here to breach. I can get out right here. Actually, I'm over 120. I'm looking for at least 100 win loss. So we're good to go there. Because we got that discount entry. So yeah, I could totally jump out right here. Good trade. But I'm going to go ahead and give it a chance to break through this target and then move my stop up and trail it. So this is kind of like best case scenario. A lot of times it'll stop just short of the target, which is great because if you have a big candle that gets through it, chances are we'll have retracement and you'll get stopped out, for your profit, and then it'll rally. But when it stops just short, it gives this an opportunity to be a nice big candle to get through. You can move your stop and then take advantage of that bonus money that's available. The target's 64, 65-ish, so we're in target right now. So this is a good trade, 63 even. Take the money off the table. I'm going to go ahead and look to move my stop up here and lock in some profit here in a minute. Always have to check the spread and see where we're at. 654, so we're a little low. Oh, that's why it's turning red. Don't do it. So we basically hit the target with this candle. This candle is now pulling back. I don't really want to go lower than the 100 because I really need to secure 100 to pay for my losers. So we'll see what happens here. So I put my stop to 49 because 50, it could be a stronger 96. No, wanted 100. Could be a stronger level. A lot of times people put their trades on the whole dollars and half dollars. So as long as that can be support or resistance, those whole dollar and half dollars. But you didn't see it here in the level 2. It didn't tell you didn't see like 1,000 shares buying at that level or anything. So yeah, or like crazy number of shares rather. So yeah, so there we go. So we're out. Take our $96, and then we'll see if APPS will give us some profit. I wish I would have got out now with my 130 because I was over my 100, and that would have been sweet because I would have paid for this loser and left me a green day. I could have finished March green, but now it'll all depend on what happens here with APPS. So here with APPS, when this spiked up to here and we were so close to risk and this resistance area, I had a chance to add to my position while I was working on my exit here. I wish I would have added another, doubled up my position basically, because if I would have got stopped out, I would have had a tiny loss comparatively, where this slide to the downside here, because it did hit this resistance area, slide to the downside would have already put me in the, major profit zone. I could have sold all those shares. And then this would be only a green trade, even if my remaining shares get stopped out. So would have been a good play. That would have been a good trade. I would have been trading good if I did that. But because of that, I'm going to have to settle for less profit or potentially a loss. So we'll see how this plays out. But now we're in the profit zone. And I do have too many shares for what I talked about earlier because where my stop is. So I'm going to put 50 in here. Enter. And we're going to take 50 off. Plus, I want to finish March green, and that'll be one way to do it. So, okay, cancel 2 orders. All right, so we got 50 in. We're green. What's the spread? Pretty big, so I need to let this go down a little more. Come on down. Pretty sure if I sell these right now, I'll sell in the red because the spread's 20 cents. So come down here to 79.23, please. All right, pretty good. Come on. I was just going to hit the sell button, but I think, or the buy button rather, but I think I'm going to go ahead and put it here and just give it a chance to run. But looking at the spread, I'm still above right here, 53. So this marker shows you where my entry is. So I would have to put my stop here, and that would put me in the red. I want to be in the green on these this half of these shares. I don't have to be, but it's just a psychological thing for me. So I think this stock's going down. That's why I'm in it short. So if I believe it's going down, why am I going to sell part of my shares for a loss, right? So here we are. So 37, so I can get my 50 right there. All right, so now if it backs up, I'll take off half my shares, and I'm going to have to move this down a little more. What do we got? 15 cent spread. So 52, so 42. So I really need to be down in the 38 range, 39. All right, there we go. So we got half our shares in to take out at 38. With the spread, I'll get some slippage in there, so to speak, and we should still be green on those half. And that'll reduce my exposure. So if this does bounce off this support level and become a winning trade, then I'll take a smaller loss. That'll fit my strategy and my game plan. All right, so there we go. So we're out half. So good. We locked in $10 on that. Sweet. So now we'll see what this other half does to us. 50 shares, so not a big deal if we take this loss now. So we're in at 79.52. We'll get out at 80.80, so $1.30. So we'll lose about 70 or 80 bucks, which is under the 100, and that means I can recover it on my next trade pretty easily. We also already have the money here to pay for it, so it works out good. Whereas if I left that whole 100 on there and this thing rallied off the support level, then I was looking at a much larger loss, somewhere in the $150 range, which would make 2 of these trades to recover that loss, which is bad. And this definitely wouldn't pay for it. So now we're in a good spot. So very cool. Speed bumps don't always hit these targets. Speed bumps will usually come down some. They may not come down all. And the goal of a speed bump is to recover some of our loss, not all of our loss. So really, I'm just looking to scalp this. Once it crosses this halfway point, I'll start trailing this other 50 shares. Just looking to make a little bit of money on this trade because it's a speed bump. It's not an algo play. So I can't be looking for these targets. It might hit these targets, and if it does hit these targets fast, like boom, this thing spikes down, I'm going to put my stop there immediately because chances are it's going to bounce off this first target. So anyway, so there you go. So speed bumps, when I'm playing a speed bump only, it's not to hit these levels. It's just to make a little scalp on it. So literally, I could take the rest of my trade off right now and call it a day, make that extra 13 bucks, round out my day for 100. So I'll put that remaining 50 shares in at break even. Again, this is a speed bump play, so I can't expect it to get to this target. I need to be smart with my money. So I'll put it break even, and even if we end up with a small loss, it's just a small loss. Not a big deal with APPS. Can recover it on the next trade easily. And this also is going to turn APPS into a super premium because it hasn't had a loss in forever. So we'll really be able to go big on this one the next time around. So that'll be pretty sweet. Okay, so we're out of APPS, so no harm, no foul. Made 51 cents on it. I don't have commission, so I get to keep that. And if this thing tanks down and I miss out on all that money, it's all good. It's all about, trying to trade smart, protecting the capital, all good. So, all right, so I'm going to show you the opportunities I need to take advantage of are the algo opportunities, and then speed bumps are just little, the recovery. So it's a little bit of a casino trade. Okay, so let's run through the algo real quick and what it did today. I didn't start trading till late, so I missed a bunch of stuff in here, but there's some good lessons. So Nug right here, we had our run up, and then we had our switch with permission. Jumped in late down here. We got that discount. I missed this this hit on the target up in here, and then jumped out of it. They're looking at just from a technical standpoint, this is a high probability. But I'm trading out the algorithm, and it's not high enough probability for me to want to stay in because at some point this is going to roll over and go down. So yes, I missed out on this money, but I don't care. I'm good with it. I made close to my 100 that I needed to make, and it's about making what I need to make based on my trading plan, not what was possible. Because what was possible is 2020 in trading. You don't really know until it's too late. So it's based on the trading plan. So we're close to that. So good trade on NUG. Now I wish I would have got out at $30 profit when I had that opportunity. That would have been sweet because we did get this discount, but oh well, is what it is. All right, so next, APPS. We traded this. So this trade right here, we had a run up. We had our switch to the long side. So I would have jumped in long had I been here earlier, and then I would have been looking for a speed bump here. So, and then a speed bump is not to get all of it, right? It's just to recover some, or sometimes you get all of it, but it's just to recover some of your loss. So had I speed bumped this and I got out somewhere in this zone, then I would have got out with half my, I would have risked basically 50 to make 100. So it would have been a good deal overall, even though it would have been a losing trade in the day. But because I missed this and we did have some clear resistance here, I was able to, and some support as well, jump in on the speed bump side just to scalp this and make a little bit of money. Unfortunately, we only made 50 cents. But hey, it's green. It's still money. I wish I would have got out here instead of here, but or somewhere in here. But that's how it is. And then I wish I would have added to my position here because we had resistance, and I could have definitely made some money there. But anyway, that's how it goes. All right, next. CVS. So here's a lesson. All right. So CVS, we traded on the switchback and we traded on the normal simple switch day trading strategy. So right here we had our switch, no trade on any of them, and then we had our switchback, which would be a trade, and we had permission. So this fell under both buckets. We haven't had a loss in a very long time for CVS, so this is great news for me because I didn't trade it and it was a loser. So that means that the next time this sets up, I'm going to be able to increase my share size and really take advantage of the super premium status. But here we are. So we got our, as soon as you got in, straight loser, right? Now, if you put your stop at over high of day, you may have come back down. You might still be in this trade, but your risk reward would have been way off. So I wouldn't have done that. So, but what I would have done is got stopped out right here, as algorithm is telling me to, and speed bumped it typically, right? I would have definitely I always speed bump most stuff. And then as soon as we got to high of day, I would have been out of my speed bump because there's going to be resistance. We know high of day and low of day is support and resistance. How much, we don't know, but we know that there usually is some. So I would have jumped out and basically would have been risking 50 cents to make $1 and would have recovered some of that loss. And then that means the next trade as a super premium, I could easily recover today and then some and still make profit. But so there we go. So that would have speed bumped that. Now, if you stayed in the speed bump and you didn't bounce out here, you're having more opportunities to bounce out with a little bit of profit before this consolidates and then chooses a direction. Maybe it goes up, maybe it goes down. Who knows? I'd rather just bounce out, take my loss, and my smaller loss than usual, and get it on the super premium. So there's CVS. And the last one, until I find I spend some time to find another stock to fill that TWO spot that we dumped. This is the last one in our portfolio now, QCOM. So QCOM we play on the switch. And then speed bump to profit. And right here we had our switch and a nice run up, nice winner here. So anyway, there you go. That's the day. That's the portfolio. You can see the algorithm working on everything, whether I traded or not, so that if you're tracking along with these videos, you can see how successful this algorithm is, how simple it is to trade, and you can find more information at the link below if you'd like to get one for yourself. In the meantime, if you can hit a like button on this video, that would help me out with YouTube's algorithms. And if you're not yet a subscriber, please go ahead and subscribe. Hit the bell icon so you can get notified of new videos. And down the road, I'll have more educational content coming out as well, like Why Traders Lose and some other video series that I'm working on to start producing some additional content for y'all. All right, everybody, so let's go over to the log real quick and see what the log is looking like for closing out March. Let's see how this is turning out. Okay, so here we are. So we had NUGT we put in and got our $96, and I put my notes in here as well. So over here, I went into APPS all in just in one shot, and then I scaled out. So I'm going to show you how I do that since I just talked about it last time. Come over to 261, I right click, and if you want this log, there's a link in the description below where you can get it. So over here on 261, right click, and then insert, and then control, and then hold down control, push D, and then it automatically comes in, and then I just change this. APPS. And the reason why I control D is so all the formulas copy over. And short. And then our entry was 79.52. And then our first exit on APPS was 79.42. We had 100 shares, but I took out 50. And then in the second one, I took out 50 at 79.61. So we took a loss on those second shares. Even though our stop was in profit, that's because of that spread I talked about. And then cool. So that gave us basically a green trade on that overall. So there we go. So we're going to finish out the last day of March, making $96.74. Going to go over to our scaling ladder. And we're one bar away. Awesome. So April, basically, after the first day of trading in April, we should be able to, which is tomorrow, we should be able to scale up into the $150 range, which is fantastic. And then once this is done, basically the warm-up period, we're going to get aggressive and jump in here. Now, here's what happens, though, and I'll talk about this again when we get ready to do it, is if my first trade's a loss when I get to my 500, that's going to set me back 4 bars here, and I'll be back to the 150 range all the way back here if my first trade is a loss. So what I might do is I might wait until there's a super premium play and then jump into super premium play on the scale up to 500. So my probability of success is so high, it'll be like a 98% probability that I'll secure this first $500 range. And then after that, my trades can, if I have a loss, it'll pay for that. So, and hopefully we can stay in the zone, because one loss, once I get here and I have one loss, it's going to take me back 4 bars. So that's a pretty big recovery to get back to this. So I'll wait till this is super premium. And while that's happening, if it takes, 5 more of these trades before I get a super premium to scale up, then, I'll get pretty deep into here. I'll cover all that. So all good. But we'll talk about that again right before we get into that zone and how we kind of manage that risk. But at the same time, I want to be able to give myself the opportunity to get really aggressive here. So I just got to see if a super premium shows up in this area, or just wait until we can get deeper in. But all right, everybody, let's dashboard. So March, we're going to close out March with $3,300. I was looking for 35 or 200 short. I should keep trading until I get my 200. No, just kidding. Don't do that. So I take what the market gives me, and that's it. I'm not gonna stress about it. I'm not gonna go try to force a trade or anything like that. Take what the market gives me, and moving on. So $3,300 for March, pretty sweet. So yeah, all right, everybody. We'll see you tomorrow, April 1st, and hopefully we can get off to a good start in April.